Hello, and good morning, guys. It's a lovely, beautiful Thursday morning. Today is the 13th day of August 2026, and here is what we were looking at yesterday. We were looking for potential sales below this level. We never got triggered for the sales, for the buys, for the high risk buys. For the high risk sales, we are looking for high risk sales below this level. You see why I call them high risk? Because you got the confirmation here. You got the confirmation for the sell here, but it never played out. It never hit any TP. Just reversed and started pushing up. That's why it's high risk here. Because this low, this support here, this low had not broken any structure. That's why that's why I called it. That's why I call it high risk. A low is confirmed when it breaks a structure, and a high is confirmed when it has broken a structure. Okay, so let me show you what I mean. You see this high is a confirmed high. Why? Because it broke structure here. Do you get what I mean? And this low here, this low is a confirmed low. Why? Because it broke structure here, and you can also say it broke the structure here. Okay, let me look for another example. Here, we can say this low is a confirmed low. Why? Because we had a break of structure here. But you see here, this low, it's not a confirmed low. Why? Because it has not broken any structure. And that is why I call them these entries high risk entries. They're within a structure. They're within a structure. They have not broken a structure. Okay. So for the buys, I hope you've understood that. For the buys, we were looking for potential buys above this level here. We're looking for potential buys above this level here. We got the first candle that tried to break above was rejected, closed below. Second candle also rejected, closed below. You can see that. Let me enlarge it. Let me zoom in. The second candle came, tried to break above, was rejected, closed below. The third candle closed above. But now, here's the thing. You see, it broke above at around 1 p.m. And remember, yesterday we had CPI. We had CPI coming in. So taking this trade at 1 p.m. and when we have high impact, red folder news, high economic news that was coming out at 3:30, uh, didn't make sense to me because these are many hours to time. This is the CPI. This is when the CPI came in at 3:30. This is the CPI. So it didn't make sense to take this trade here. So I just waited for the CPI. But you see, one thing I've come to notice, or should I say it or not? Let me first. Let me prove it first, then I'll teach you this. Okay? There's something I want to teach you about this high impact data that comes. Uh, I'll teach you something one of these days. Let me just confirm it. So I didn't take this trade here. You can see the CPI. The CPI came in. Uh, this was the data was not changed. The core CPI, the core CPI year over year, core CPI month over month. The data was unchanged. This is what I'm talking about. Where was it? The core CPI month over month unchanged. Core CPI year over year, nothing changed. The forecast and the actual, same thing. Forecast, actual, same thing. For the CPI month over month, the forecast was 0.1, the actual came in at 0.1. For the CPI year over year, the forecast was 3.4. The actual came in at 3.4. That's what I mean when I say nothing was changed. Everything was as the forecast was as everything came in as the forecast had been the forecast given. Nothing was changed here. Okay, you understand that? So that's why it was hard to trade this CPI. Let me show you my analysis for the CPI. This was my CPI analysis. This was my analysis for the CPI. This was the analysis we had for the CPI. So I was expecting a buy from here, a buy limit from here. Personally, I didn't trade the CPI yesterday. Uh, Something about it just didn't give me confidence about it. Why, you may ask? Because remember, the NFP, the NFP came in very negative, negative 23, the non-farm payrolls. Uh, it was at negative 23,000, meaning during that month, 23,000 people had lost jobs in the US. So I tried reasoning that plus the outcome of the CPI, what would the outcome be? It was not really adding up to me. It was not adding up for me. So I decided to just sit and watch the CPI. But you see, this is what happened. This was right when the CPI came out. This is when the CPI came out here. Had you placed a buy stop limit here? Uh, Remember, the CPI, this I want you to see this. Remember, this CPI you don't enter with confirmation. What you do once you have marked your levels here, you can see I had marked this the CPI buy stop limit. This is where you'd have placed your buy stop limit and targeted this high here. You would have targeted this high here, and for the sell limit, this is where you are to place your sell limit and target this low here. Okay, this is where you would have targeted sell limit here, target here, buy limit here, target this. uh Everyone won yesterday. Yesterday was a win-win for everyone. But I knew, I had a feeling this would happen. It would sweep this liquidity upside out on the buy side and the liquidity on the sell side. So that's why I decided to stay out. But had I placed a buy limit here, then I would have hit take profit here. Same thing for the sell limit. If I placed a sell limit here, I would have hit take profit here. Okay. You Now you place a sell stop limit, not a sell limit. A sell stop limit, uh, I would have been activated here by the buy stop limit would have been activated here straight to TP. Then immediately after it hit this level, I tried to push up. Then this candle, it tried to push up. Then this candle pushed down in an instant, in less than 2 seconds, I believe it. Yeah, if you were there watching it this live, then this kind of pushed all the way down here in less than a second, in about a second or so. So you'd have been triggered here and hit your TP here. You'd have been triggered here and hit your TP here. So CPI would have been a win-win yesterday had I placed this buy stop limit and the sell stop limit. But considering the outcome on the NFP, I just decided to sit it out yesterday. Okay, so that's how you trade these fundamentals. You trade them with with the stop limits, not limit orders. You place stop limit orders. Okay, I hope you understand the difference between a limit order and a stop limit order. A limit order would mean that price would have to break above here first, then retest, activate your order, then boom, profit. For a stop limit order, it would mean that price was below this level as you're placing your order. Then immediately it came to this level, it would have been activated instantly, and then boom, TP. Okay, so that's how you'd have traded that CPI. Nothing changed. The data didn't change, but the volatility was still there. Uh, okay, the volatility was still there. And you may ask why we had this volatility. Uh, this is what we call people sentiment. This is just the market sentiment. What people believe think is going to happen. These are just the pressure, the sentiment, the people sentiment. It's just the pressure of the market. Okay, so that was the CPI. It was a good CPI for the traders who took these trades. Uh, for me, I just decided to watch and see what happened. Okay, so that's how you'd have traded the CPI. That would have been a good CPI to trade, but we always have a next time. Okay, there's always a next time, so we can wait for the next CPI coming next month. I hope you have an idea how to trade this. But in case you don't know how to trade them, just stay out of the market completely. Just stay out of the market completely. Okay. So that was the CPI for yesterday. So real quick, I've taken so much time explaining that. So let's dig into the charts today and see what to expect. We're going to remove everything here. Remove everything here, and real fast, real quick. We look at the data today. What are we expecting? I know the PPI is coming out today. It's also high impact data that affects the market. And we also have GDP on the GBP today at 9 a.m. in the next few minutes. And at 3:30 p.m., we have the core PPI and the PPI month over month. This is a purchasing price index. Okay. PPI is the purchasing price index. It also moves price. You expect some volatility out of it. Okay. So real quick, let's jump into our charts. Do our analysis, identify our levels of resistance and support. That's our level of resistance. That's our level of support. Down to the weekly, we have our level of resistance up here. This is our level of support. Down to the daily. On the daily, we are looking at this level here. We have our resistance down here, and we have our support. We have our support down there, and then we have our resistance up here. We jump down to the 4-hour time frame, and on the 4-hour time frame, we are looking at, did we have a break of structure here? Yes, we did. So these are resistance up here on 4 hours, and these are 4-hour support down here. Why? Because we had this break of structure here. The structure broke here. We had a break of structure there. So these are 4-hour range. You're operating within this range. And when we get to 4 hours, my strategy says that you move this to sit where the bodies are seated. Identify this level as a target here, not a level as a target there. Then Move this one to where the bodies to sit on the bodies where the bodies close, and then identify this week here as a target. So these are for our range. We look at what we have on 1 hour. On 1 hour, we are looking at this. This is what you have on 1 hour. And on 1 hour, we are looking at, we had a break above here. We had this break of structure here. First, we had a break of structure there. So this is the last break of structure we had on 1 hour. I'm trying to rush because of time. Yes, this is the last break of structure we had on 1 hour. So when we got a break of structure there, our 1 hour low, 1 hour low is here. Is our 1 hour support. 1 hour support. Then they have our 1 hour resistance up here. 1 hour resistance up here. 1 hour support down here. Okay. You could also identify this week here. This week. So, and this is where you see price has just tapped onto our 1 hour support, and it's being rejected here. So let's see what we have at that on 30 minutes. On 30 minutes, we are looking at, we had a break, we had a resistance here. What time is this? We had this resistance here. On 30 minutes, we had that resistance level there. Is the 8 a.m. candle. And we had this support up here. We had that support down there, and we had this resistance up here. So this is where I'd be looking to take a trade from. And this is what I would do. Bring that to the body there. Then identify this level as a potential selling area. Potential sales below. If that candle closes with that good bearish momentum there, then I could take a sell from here, push the market down to these levels here. Okay. For the buys, we could look at this level here, and we have potential buys above this level here. I remember we have another high economic data coming out at 3, high impact economic data coming out at 3:30, the PPI. Just had a look at it. So tread carefully today. Tread really carefully today. Okay. So that's what I'd be looking at. If I get this short position here, then I'm targeting stop loss. Okay, the stop loss there. Target this level here. That's a risk to reward ratio of 2. For the buys, if I get the buys above here, buys above there, I'm targeting this week here. Risk to reward ratio 3. So this is what I'm looking to trade today. Trade responsibly, guys. Happy hunting. See you tomorrow for a recap of the same. And remember always, guys, trade what you see, not what you think, and make risk management your close ally in this industry. Okay. So, and this, I always say, this is not financial advice to trade. Do your own research and trade responsibly. Okay, I'm out, guys. See you.